today. This is Taking Stock. I'm Pim Fox. I want to turn our attention to another side of the energy business, chemical companies. Yes, chemical companies such as Dow Chemical, Olin, FMC. The last 12 months been brutal, but are they once again cheap enough to buy? Well, let's find out. We've got an expert, Frank Mitsch, analyst at BB&T Capital. Good to have you with us, Frank.
Great to be here, Pim. Thank you.
I'm assuming, right, oil prices low, good for chemical companies, or no? Because margins, what happens?
You know, to some extent, it helps in a very short term. But you know what? If oil is weak, it probably means demand's weak. So, in fact, there have been times that the chemical industry has made vast profits with high oil because it means demand's strong. Now, another way to look at it is in the U.S., we predominantly use natural gas as a feedstock. So when oil is high and gas is cheap, as it is right now, that's actually very good for domestic chemical producers.
All right. And if it's good for chemical producers, what about the cyclical story right now? Because these are all supposed to be early cycle stocks.
Yeah, you know, right now the seasonality is definitely playing a role with the chemical, with investors' psychology. We've definitely seen a sector rotation out of the materials over the past few weeks and into more defensive sort of names. So that's part of the reason why you're seeing that brutal sell-off of late. I think for investors who have somewhat of a cast iron stomach and can make it through the doldrums here in the summertime, they're gonna profit quite nicely when things pick up later on in the year.
I think the saying came from Bloomberg surveillance radio program earlier this morning that someone sprayed Roundup on all these green shoots. Is the chemical industry seeing any of these economic green shoots? I mean, any of your figures backing anything positive about the economy and demand?
Well, I'll tell you, Monsanto's feeling very good about the sales of Roundup, at least going to some application. I think the general consensus among our companies, and I was actually out with a fellow at Eastman Chemical last night, is that the destocking phenomena has been washed away, so we are now seeing underlying demand. But underlying demand is not that great in the Western world, in North America, Western Europe. Asia has certainly picked up, although we're a little bit concerned, does China start to roll over or not?
Because that could be destocking too, right? That could be just the whole issue of building up inventory.
It could, but one of the things that I was keen to see is that China actually, the Chinese government has actually reinstituted some of the export tariff rebates that they had taken away. And I think that probably was an admission that they're concerned that maybe things start to weaken up. Right now, that's not the case. We've seen decent levels of demand in Southeast Asia and even in Northeast Asia, but it's too early to proclaim victory. A lot of folks are saying, just wait till the fourth quarter. You're going to see real improvement year over year. Well, that's true, but remember, fourth quarter 08
was lousy.
Yeah.
So it's just a question of whether they're going to survive until the fourth quarter of 2009.
You know, the nice thing is that a lot of companies have done what they can to get covenant waivers, to relax some of the debt covenants that had been in place, as well as, you know, pay down some debt. In some cases, even issuing equity, which, you know, gets them through the near term. But you know what? When you issue equity, you take away peak earnings performance.
All right, let's talk about some of the companies in just this context, because we're talking about pulling production out of the system. You cover FMC. They pulled a plant offline a lot faster than a lot of people thought.
Yeah, that's true. They are the #1 producer of soda ash in North America, and they do it much cheaper than anybody else on Earth. And they saw a situation where demand, which had been very flat over the past decade plus in North America, was coming off a little bit. So in order to make sure that customers didn't get the bright idea of asking for price concessions.
How dare they, right?
They would go ahead and take some capacity offline temporarily to make sure the domestic market stayed snug. And that's, in fact, what has happened. Now, they've also become a bit more aggressive in the export market through their legal cartel called ANSAC, which is made up of the major producers in North America. The Chinese have been lowering the price, even though it costs far more to make soda ash synthetically in China, but they've been lowering the price, and this export tariff rebate has allowed them to lower the price even more. They gained volume. ANSAC was asleep at the switch. Now ANSAC has said, enough. We deserve our fair share.
Don't lower the price of soda ash anymore.
Well, they're playing the game that we're taking back some market share and trying to teach a lesson in statesmanship to some of the Chinese producers.
Is it working?
Not well. You always have the bloody battles in the beginning, and we're in not Appomattox. That's at the end of the.
That's okay. We're at the very beginning.
We're some of the bloody battles in Antietam. Sorry, that's what I was thinking of.
Let's talk about soda ash just for those that aren't familiar. You're the expert in the chemical industry. What do you make with soda ash? Glass, right?
You do. Half of soda ash is used in glass, whether it's container glass, automobile glass, fiberglass. But you also have less cyclical applications like detergents.
Containers.
Absolutely, absolutely. But also where you need a source of alkalinity, because most industrial processes create acids, you need to neutralize them. Think of it as a giant Rolaids. You could use caustic soda, and if we talk about Olin later on, we'll talk about that. But you can also use soda ash. So it does tend to be more in tune with economic activity. But again, FMC is making it for about $60 a ton. The Chinese are making it for about $210 a ton. That's a hell of a
price differential.
Yes.
And you like the stock?
I love the stock. You know, we've spent a fair amount of time talking about soda ash. Soda ash is about half of the industrial chemicals that FMC makes. Industrial chemicals is only a third of what FMC makes.
We're going to talk, you know what? We're going to talk about the other two-thirds of what FMC makes, but coming up. We're going to have more with Frank Mitsch, analyst at BB&T Capital Markets. We're going to delve into the world of chemical companies. More on FMC, also Dow Chemical. This is Taking Stock on Bloomberg. I'm Pim Fox. My guest is Frank Mitsch, expert in the world of chemical industry. He is with BB&T Capital Market. Frank, we talked about the one-third of the business with FMC, but what they've got is agricultural business. They've also got specialty chemicals. Tell us about the two-thirds.
You know, the ag chemicals business is a high profit margin business. They mainly do insecticides in non-row crops, so things that are not exposed to the genetically modified seeds that are taking away chemical sales to corn, soybeans, and cotton. So it's a more specialized niche that they have, and they have good market shares in these businesses in North America and in Latin America. We've seen close to double-digit growth on a continual basis there, with north of 10+% growth on the bottom line there, and it shows no sign of slowing down. There is a concern out there, well, gee, fertilizer demand has been weak. That doesn't matter. What's happening in the fertilizer side is that prices ran too much last year, and the farmers can, for 1 year, dial back the amount of fertilizers that they use without an appreciable loss of yield. You can't do it 2 years, but you can do it for 1 year, and that's what they're doing. You still need the insecticides because you don't want the bugs to eat your crops. So FMC is not exposed to the part of the ag business that has been getting a lot of negative press.
So when you see the companies like Potash or Ternium get crushed, you don't necessarily want to lump FMC in that same basket.
You do not, although the Mo guys that are out there...
the momentum players.
Yes.
Yeah, okay.
A year or so ago, when all the ags were flying, FMC got caught up in some of that as well, because people said, oh, yeah, ag, you know, let me get involved in that. So it's a much nicer business. Now, in specialty chemicals, they make two types of specialty chemicals. One is biopolymers, and these are things like you buy seaweed and you convert it into food gums or capsules, pharmaceutical capsules. They have very high market share in that business. So food and pharma is two-thirds of their specialty chemicals business, and that is a very low volatility type business, you know, mid to upper single-digit top line and double-digit bottom line that they're being able to grow there. The other remaining sliver is lithium, which right now is having a bit of an issue with consumer electronics, so much is used in batteries. Consumer electronic demand is off. But guess what? The automobile hybrids are coming, and they want lithium. They don't want nickel. They want lithium, and FMC, together with Rockwood and SQM out of Chile, are the world's leaders.
So that's where you want to be if you want to play that space. You got an $85 target on the shares of FMC, and you still got to buy.
I have a buy on the name. It's actually my best idea right now, and we think investors should pile into it.
All right. I want to give you time to do two others. I want to ask you about give me an update on what's going on at Dow Chemical and the Roman Haas, because there's nobody. I mean, what happened? There's no Roman Haas representatives on the board, and that Roman Haas name gone.
That's correct. So some of the pre-negotiations that had gone on. Oh yeah, we'll keep Roman Roman Haas name. Oh, we'll keep the board members. Oh, we'll own the building in Philly. That's starting to go by the wayside. But really, right now, they made the bed. They're lying in it, and they're doing what Dow does best, and that's whack the hell out of costs. And we saw it when they bought Union Carbide. 90% of carbiders are gone, and so it's not going to be to that level. But recall that they originally were talking about numbers of 6,500 employees. Now they're talking about 10,000 employees leaving the roles of the combined Dow-Roman Haas platform.
But you got a hold on the stock right now.
Yeah, as I look at the valuation right now, well, first off, a couple things. They just completed the deal. Roman Haas had the worst quarter in its history in the first quarter. Second quarter is better, but I don't know how much better. So it is a tough time for Dow. As I look at the valuation, we're about 5.5 times EBITDA next year. That's not crazy cheap in my book.
Okay, all right. Unfortunately, we are out of time. I got to have you back, Frank Mitsch from BB&T Capital, because we want to connect making bullets with Olin Corp. That's going to be our next thing on your next appearance. Thanks very much for coming in.